Personal finance is the management of your financial activities, including income, expenses, savings, investments, and debt. Understanding the basics of personal finance is crucial for making informed decisions and achieving financial stability. Here's an overview. 1. Budgeting. Definition. A budget is a plan for how you will allocate your income to cover expenses, savings, and investments. Steps. Track income. List all sources of income. List expenses. Include fixed rent, utilities, and variable entertainment, groceries expenses. Set priorities. Allocate funds to essential expenses first, then to savings and discretionary spending. Review regularly, adjust your budget as your financial situation changes. 2. Saving. Emergency fund. Aim to save 3-6 months worth of living expenses in a liquid, easily accessible account. Savings goals. Set short-term vacation, new gadget, and long-term buying a home. Retirement savings goals. Automate savings. Set up automatic transfers to your savings account to ensure consistent contributions. 3. Debt management. Types of debt. Good debt. Investments that grow in value or generate income, student loans or mortgages. Bad debt. High-interest debt that doesn't contribute to long-term wealth, like credit card debt. Strategies. Pay more than the minimum. Focus on paying off high-interest debt first. Consolidate debt. Consider consolidating multiple debts into a single loan with a lower interest rate. 4. Investing purpose. Investing helps grow your wealth over time. Pacing inflation. Types of investments. Stocks. Equity ownership in a company, offering potential for high returns. Bonds. Loans to companies or governments, typically safer, but with lower returns. Mutual funds or ETFs. Pooled investments that diversify risk. Risk tolerance. Understand your risk tolerance and invest accordingly. More aggressive in your youth, more conservative as you approach retirement. 5. Retirement planning. Start early. The sooner you start saving for retirement, the more time your investments have to grow. Retirement accounts. Contribute to tax-advantaged accounts like a 401k or IRA. Employer match. If your employer offers a matching contribution to your 401k, contribute enough to get the full match. It's essentially free money. 6. Insurance. Types of insurance. Health insurance covers medical expenses. Life insurance provides financial security to your beneficiaries in case of your death. Home or auto insurance protects your property and assets. Importance. Insurance helps mitigate financial risks by covering large, unexpected expenses. 7. Credit management. Credit score. A numerical representation of your creditworthiness. A higher score can help you secure loans with favorable terms. Building credit. Pay bills on time. Keep credit card balances low, and avoid opening too many new accounts at once. By mastering these basics, you'll be better equipped to make informed financial decisions and work towards financial independence.